So my name's Alex Safirovich. The company that I work with is InterLinc Mortgage Services. I am the branch manager here for the New Orleans office. And as far as region goes, I can pretty much cover anywhere in the state of Louisiana. I am licensed in several other states by request of some clients that have, second homes or friends or family. And so I am licensed in Texas and Arkansas, Mississippi, Georgia, Virginia. So there's a handful of other states as well, but my primary focus and business is done here, right here in Louisiana.
Gotcha. And it sounds like almost every state we border, in addition to some others. So that would be
that's right. That's right. As you can imagine, kind of people expanding out, wanting to get those vacation homes or second homes and what have you. And I guess great experience. So they asked me if I can accommodate in those states, and I complied. So
hey, well, there you go. You're smart and flexible. So
that's right. That's right. That's right.
Yeah, it's going the extra mile right there. So.
Yeah, absolutely. So as far as one of the things I did want to kind of point on is our organization in general, because there are several different types of lenders out there. So I think that might be a key point to differentiate. You've got your traditional banks, that happen to also offer mortgage services. You have the mortgage brokers. And then you have us, which is our category is a mortgage lender. So I guess the very simplified, broken down version of each one is that a bank is more of a general practitioner, if you will. They offer a suite of different types of products and services. Mortgages happens to be one of them, and so they'll have checking accounts, savings accounts, credit cards, CDs, you name it. They've got more or less a wide variety of options. They can also do mortgages, but that's not their specialty.
Right.
Then you've got the mortgage broker, in which the way that they're established and set up is that they don't really handle anything internally or in-house other than putting together the loan package. Everything else, as far as the processing and underwriting of that loan, which is the final decision making of your final loan approval, where you're actually going to get the funding for your loan, that is going to be sent off to these different sort of financial institutions to get approved through their underwriting and processing department. And the main difference.
Take your info and shop around.
That's right. That's right. So now the main difference between a mortgage lender and those other two categories is that we're sort of the best of both worlds. We have access to a suite of different investors, lots of different product types, and we have the best of both worlds, because from a bank standpoint, they're able to offer local service, competitive pricing. We can do that as well, but more efficiently, because our specialty, our only focus is residential mortgages. And then from a broker standpoint, because they don't handle anything internally, it's all subbed out essentially to these other companies. The relationships are a little bit more far and few between, whereas we have internal processing and underwriting in-house. We're a lot more fluid, we're quick, we're efficient, and you're going to get kind of all the best of all worlds, right? Because that's our only focus. All we do is residential mortgages. That's what we specialize in and handle on a daily basis. So that's
got it. And in times like these, where if you're thinking of snatching up mortgage or interest rate as much as they're changing as rapidly, being quick on the draw is probably more important than ever, and it's certainly always important.
Absolutely, absolutely, yeah. I mean, especially with all the dynamic changes that are happening in the current landscape of the market we're in, and it's happening on a daily basis. We're seeing changes. So
your life must be pretty interesting right now. Sure.
It is. It's a roller coaster, but it's also a fantastic time. There's a lot of gloom out there, and with everything going on, and I think there's certain things that you definitely want to pay attention to, but I do also feel like this is a phenomenal opportunity for many as well, evaluate their current situation, and whether that be through a current refinance, or even getting yourself prepped for when the dust settles, we get on the other side of all this and you were looking to purchase. Now is still a good time to really get yourself set up for success when we get on the other side. And you see announcements all the time, but I feel like we've made a lot of good strides, a lot of good headway out there with people following all these orders, and the doom and gloom is starting to see some more positive news coming out. At least that's what I've noticed. So
we're getting better at it.
That's right. That's right.
We got a little ways to go, but we're becoming more used to the idea.
Oh yeah. Oh yeah.
So, two silver linings from a real estate and mortgage perspective. If there are any silver linings during COVID, this is one of them. There are great opportunities to refinance and also to buy, to secure a loan. And if you are like many people, you have some uncertainty and maybe you want to wait on purchasing or getting a new loan. But there's no time like the present to get together all your paperwork and whatnot, because many people are kind of in limbo and chilling. So
that's
it's a good
right.
time to do your homework, and it's almost like a financial check-in, like with a financial doctor. You know where you stand at minimum and what your options are, and having options is a good thing.
Certainly. So to elaborate on that point, because a lot of folks right now are wondering how they can take advantage of the interest rates in the market, and I'll give just a few examples. So one being like if you're living in your current home, it's your primary residence, and you've got some possible equity in the home. There's been a lot of market appreciation. Maybe you've done some renovations or repairs on the property. There are ways to tap into that equity and really reposition your entire financial outlook by looking at things holistically. What I mean by that is if you have other debt obligations, whether it be credit card, bills that you ran up the balances a little bit higher than you would have liked. You have certain loans that are in a repayment plan that have a higher interest rate that you had secured when you originally obtained that loan. Right now is a good opportunity to possibly consolidate a lot of your debts into one fixed rate mortgage payment at a historically low interest rate. You could get into that low 3% range to mid 3% range and pull cash out to consolidate those other debts. So not only does your monthly debt obligation reduce, but so is the interest that you're paying out. So you're able to chip away at these particular liabilities and debts a lot more wisely, and not have this variable changing cost of interest to your overall financial picture. So we've done that in quite a few cases, and you might keep your payment exactly where it is now, but be able to pay off all these other debts, pay off car loans and pay off student loans and credit card debts. And so it's a fantastic opportunity for some folks just to evaluate the whole picture.
That's a really good point, and I want to just recap that in summary to see if I've got it right for everybody. When we think about mortgages and when we think about lenders, we tend to think of one bill, just how can I get my mortgage payment lower? But what you're saying is there's an opportunity in doing so to consolidate other bills as well.
Absolutely, yeah. It's more of a, like I said, a holistic approach. Not that I'm a financial advisor or licensed in that particular field, but I'm decent around. I'm decent with my way around numbers. So I've got a good eye to help you kind of look at everything as a whole and give some suggestions and advice.
Full disclosure, right? But also question then. So some people may be thinking, let me get my house in order, not my actual house, but all my bills, my credit card debt, whatever, before I look at a mortgage. And you're saying check in early, you might want to check in earlier.
Sure. So, it goes for anything, right? Could you for example, say you weren't feeling too well and you hopped on the internet and you start to look up your own symptoms and trying to self-diagnose, right? You may or may not stumble across what's actually wrong, but most people go to someone that's a professional in that field to get the guidance that they need and have a more targeted approach. So that's what we're here for. A lot of folks have the misconception that, you know, we're sitting over here with a giant rubber stamp that says denied, and like that's my goal every day, is to stamp this rubber stamp and deny folks. It's the complete opposite. You know, the sooner that you get in touch with someone like myself, I mean, this is what we do every day. I live and breathe it. So for me, it's second nature to help someone position themselves, you know, for a benefit. That is what I love to do, and what I'm great at. So, you know, when you go and bring your information to someone that does this on a regular basis, we're going to be able to offer the best, you know, guidance, advice, suggestions, give you the blueprints for what your, you know, goals are, what, you know, short-term, mid-term, long-term goals. You know, we can position you in the right capacity to at least have information that's accurate, give you some options, and ultimately it's your choice how you proceed, but at least, you know, you have everything lined up, and you don't have to have all your situation that you present to the lender as perfect, right? Because whether it's perfect now or, you know, it needs to get some work, we're going to be the best person to guide you, you know, along that path. So
you guys are like nurse, doctor, physical trainer, nutritionist.
Right.
That's right. And you only have to share all that information one time.
Yes. I know it's very, you know, some folks get a little taken back. It is very intrusive into all your personal finances, but I can assure you it's all for your benefit. You know, that's.
And you've seen it all.
That's right. Yeah.
Okay, so that was the first thing you were talking about, was consolidation and what have you. You had a couple other things on your list. Let's get to them.
Sure. So the other component is just simply reducing your interest rate. I mean, that's obviously, you know, it's kind of a given, right? If you have a higher interest rate, you know, some folks, what they're doing is they're wanting to reduce their monthly payment obligations, so they'll keep the same length or maybe extend out the term. Maybe they were in a 30-year, but they've only had their house for 3 years, and so they're at 27 years. So we're looking at, you know, either 25 or even 30, again, your options to reduce the interest that you're going to pay over time. The way a mortgage is set up is a lot of your interest on the loan is paid on the front end of the loan, right? So not to get too deep into amortization schedules and all that sort of fun stuff, but in your monthly payment that goes towards your principal and interest, at the beginning of the loan, most of that payment is interest. At the end of the loan is where you start to get to more payment going towards principal. So in that 3-year window, you haven't really, you know, gotten over that threshold of most of your payment being interest. So you're still going to see a huge advantage in refinancing, reducing your overall interest rate. Now, the strategy of what you're comfortable with depends on your current circumstances. And what I mean by that is some folks will go back to a 30-year, reduce their monthly payment obligations, still save on interest, and they can always apply more towards their principal to reduce their overall term length. So that's option one. Option two, some folks have actually gone and wanted to simultaneously reduce their interest and their term at the same time and go to 25, 20, or 15-year mortgage, which accelerates certainly the payoff. Your payment may increase a bit, but the interest being so much lower, it's just a good opportunity to do so, and you save a ton of interest over the life of the loan. And we're not talking about thousands. We're talking about, I mean, some cases have been hundreds of thousands, and I'll reiterate that as hundreds of thousands, 6 figures worth of interest savings. So it's huge. It's a huge impact. So that's
you're chipping away at it in much bigger chunks.
Yes.
So yeah, if you can do it,
right. So
it's a good idea.
So that's the other layer that we're seeing, and then the third one, which I personally don't handle, but it's still nice to touch on, is that you've got access to home equity line of credit. It's slightly different. It doesn't change anything to do with your current terms. Say you've already got a low interest rate. Well, how can you still maybe capitalize on what the market is doing and still have access to a lower interest rate type of loan and tap into equity in your property? You can still accomplish some of these different consolidations that were suggested on the front end without having to change your original loan term. And the equity line is a second mortgage that you put on your property, and it acts as almost like a credit card, in which you can draw down a balance, and then whatever your balance drawn down has an interest payment that you pay on that drawn down balance. But as you pay it off, you can reaccess that same amount of funds, if that makes sense. So
totally, because the home equity loan, you're leveraging the equity that you have in your house as collateral, right?
That's right. That's right. So you might say, okay, I've got 100,000 in equity on my property, and I'd like to tap into 50,000 of that. So when you access that line, you set up the second mortgage to give you access to the 50,000, but you're not paying on it until you actually pull money from it. So you might just have it sitting there, and you decide, at one point you need to pull 5,000 out. Well, when you pull the 5,000 out, you'll be paying on just that 5,000, not the full 50,000. So it just gives you access to it's like cash. So it's different than a credit card in that sense, but it's a bigger line, and it taps into the equity. So that's another area where some folks have used that to help get through some periods of time here where you might have a hit on your overall income that'll help you kind of get through those periods, aside from these SBA loans and all that. And then the other side of the equation is you could still use that to consolidate other debts as well. But it's another unique option, and gives people access to their equity of their home.
And we keep hearing, we're going to, on TV and whatnot, we're going to see more of that, because home equity loans give you a lot of liquidity. You use the term, you can use the money that you get out of that almost like cash. So I think sometimes people think traditionally home equity, you're going to reinvest that into the house, DIY projects, which, by the way, there are a handful of DIY projects you can do yourself during COVID to increase the value of your home.
Right.
Don't bite off more than you can chew, because you'll be stuck with it and in it.
Yeah.
But it can be used for a lot of different purposes. So thank you. This is super helpful. So if someone is going back to either wanting to see where they stand, what they could qualify for, and what they could refinance at, what are the steps they need to take?
Sure. So usually, like I said, the first step is just a phone call, email, connecting up with the lender, right? Having a good framework of what you're trying to accomplish, with just a general conversation before you start pulling any additional information. That's usually the best first step, just to make sure that what you're looking for is possible right now, and that it's going to have some type of underlying general benefit for you, right? So that's the first step. As far as like looking at just a general refinance, that we very minimum documentation to give some ballpark ideas, like a current mortgage statement, your property taxes, annual insurance premiums, and like maybe a ballpark credit score that you might have pulled from Credit Karma or something like that. Those are really the most basics that you would need to engage into some type of conversation, just to see if you can better your scenario. And then confirming all of that with more specifics would require additional information that we'll address at that time if it makes sense to proceed forward.
I like that term, bettering your situation. So what are your goals? And your job is to figure out how you can help people reach those with the tools that you have through lending. Oh, and we froze. There we go. You're back.
Sorry, yeah, I keep getting the call coming in.
That's okay. You're popular. You're in high demand right now. I understand that. Busy day. So, thank you for your time. I super appreciate you laying everything out so simply and plainly. And how can people reach you?
We have a very easy website is lendnola.com. So that has all my contact information. You could reach me there. And then obviously if you'd like to send me a DM through Instagram, I'm at lendnola mortgage. And besides that, I'm sure that if y'all have communication with you, if anyone needs to reach me, you can always pass along my information.
Yeah, at Refinancing, Elisa at FQR, just reach out to me. I'll put you in touch.
One last thing I will like to leave off on, because I know we're kind of getting a little into the time frame here, but a few things just that we've implemented to help with this whole COVID scenario.
Thank you.
So social distancing obviously is very important. We are still keeping everything functioning at the same level as we were prior to this. The implementations that we made is that almost everything is electronic at this point. Everything can be e-signed. All of your closing documents, except for about 5 pages, which are considered your collateral documents, do need to be executed in front of a notary, which is the title company that you handle all your final documentation signing at. But what's great is that some of these local places are making accommodations, all the title companies, where you basically drive up to the location. You don't even have to get out of your car. They're going to walk out to your car. They're going to bring you the few documents that need to be hand signed. They're going to have their witnesses there. You sign, and it's about a 5-minute process. So it's we call it slim e-close, and it's fantastic. It makes things a lot more streamlined, and then all of our front end documentation, everything can be done electronically. So we just try to keep everything convenient and smooth through the process. I thought that would be important to touch on during this whole thing. You don't have to go out and meet with someone in person and bring us your documents. Everything can be handled remotely. So
thank you. That is super important, and it is also unique to Louisiana that notarization has to be done in person. So if you're tuning in from New York and you're buying there, good for you. You can do it electronically. But if you are moving to Louisiana or within Louisiana, you do need to do that in person, and the notaries are set up for it. So, and they have the time.
Yeah.
So, and most of the documents that Alex touched on, I know this sounds really boring, but it's a good time right now to be looking at taxes, doing your taxes. You can file them now and not pay them until July 15th. So you can be getting all these documents in order if this year is more favorable for you, and package them together and get them to a lender. So 2 birds, 1 stone. Nobody likes to do this kind of homework, but the payoff could be well worth your time.
Certainly.
Well, thank you. And I super appreciate the time, Alex, and you hang in there. And if we have any questions for you, I will forward them to you. And you rocked it. So
all right. Thanks for having me. Yeah. Good luck, everyone out there. Stay safe. And we'll hopefully do another one of these updates coming up soon. So
I would love that. Things keep evolving. So a little bit of status and progress reporting is great. I appreciate it.
All right.
Thank you for making the time, because I know y'all are slammed. So.
Sounds good. Anytime. Thanks.
Take care. Bye.
Bye.